Hi, I'm Jason Sen. I've been a trader for nearly 40 years, and there have been many times throughout my career when I've just been ready to quit. I've had enough. If you're about to quit trading, watch this. I can help you. If you're an inexperienced trader, you may feel that trading is a quick fix to earning a big amount of money. You think that you can do some analysis and try to guess in which direction the market is about to move. You jump into a trade for fear of missing an opportunity in the hope of making a quick profit, and then you realize you should have waited. You don't think about how much you're risking, and you haven't thought about where you'll cut your loss. You start panicking when the trade is losing, and you pray that the price will reverse. If the trade is winning, you take your profit too quickly for fear of the price reversing, and then you regret the decision when the price continues to move in the expected direction. Or greed starts to set in because no target was set when you entered the trade. You start looking for reasons to suggest that big profits will be made, and you stay in the trade too long. Eventually, of course, the price does reverse and you're paralyzed as you watch your profit evaporate. This is because inexperienced traders have no plan or no strategy. It's exactly what I used to be like for years. I used to trade spontaneously, which just kept leading to more losses. I didn't plan my trades. I'd be in a position, it would start losing, it would go further into a loss because I didn't use a stop loss. I started panicking as the losses mounted, way beyond what I initially expected when I entered the trade. I'd completely lost control of myself, my account, and my trade. Inexperienced traders tend to watch every pip as prices move up and down. It's called trade watching. You sit in front of your phone or your screen, you're just watching prices moving up and down, watching your P&L moving up and down. When you're in a losing position, if you haven't had a trading plan, if you haven't got a strategy, even if the position starts to recover and the losses decrease, maybe even start moving into a profit, the trader is still paralyzed. You don't know whether to cut the loss when it becomes a small loss or whether to hold on and see if the position moves to break even or even into a profit. You just can't make the right decision. You're in a complete state of confusion. Eventually, the loss can then become so large that you can't face realizing the loss. You can't face getting out of the position, and you allow it to become even worse. Become so out of control. It's an all or nothing trade where you're literally risking everything in your account just to try to break even. Eventually, you can take no more pain and you exit, leaving an enormous loss, and there's little funds left in your account. Or even worse, you lose everything in your account and your broker closes the position and leaves you with nothing. The next steps after sustaining a big loss. Well, firstly, your confidence is destroyed. You can't progress. You can't process how such a loss was sustained, and you believe trading is too dangerous, so you give up immediately. The other way things work is, if there are any funds left in your account, you become angry and you blame the market for the loss, rather than your lack of planning and your self-discipline. This leads to revenge trading, whereby you take another large and uncontrolled gamble to make the whole loss back in one trade. This usually leads to another huge loss, potentially wiping out the whole account. If the trade ends in profit, the trade is exited. But this often leads to uncontrolled excitement and overconfidence. You are desperate to repeat that profitable trade and that feeling of elation, and you jump into another unplanned and spontaneous trade with no risk assessment and no clear exit strategy. It's likely that this leads to a losing trade and a negative cycle begins where further losses are sustained. So what is the correct procedure to build consistent profits? Learn at least one trading strategy proven to work over a large trade sample size, providing consistent returns when executed with discipline and patience. Learn to analyze markets effectively to identify low-risk trading opportunities and avoid trading spontaneously. Don't search out tips or recommendations, especially on social media. Develop an entry strategy so you know exactly how, where, and why you'll enter the trade to minimize risk and potential losses and avoid overtrading, so that you're not guessing and just jumping in because you see the market moving. And then Always place a calculated stop loss so you know exactly how much you'll lose if the trade fails before you even get into the trade. The stop loss should be placed according to analysis rules, not dependent on how much you want to risk. This will include managing the size of the trade to control the risk. Always set targets for the trade. More than one is possible for a strategy that allows scaling out. If you set targets for the trade, you'll ensure that you don't get greedy when the trade is open. Every trade should be fully planned before execution, with clear entry and exit strategy in line with strict risk and trade management plan. This eliminates impulsive and spontaneous trading, which inevitably leads to losses. It's only by following a proven strategy and adhering to strict rules that a trader can expect to make consistent profits and feel fully in control of the trading process. Professional trading should be planned, unemotional, and even boring. If you are trading for entertainment, that's fine, but accept that you are gambling as you would do in a casino and you're not trading with discipline.